All right, welcome everyone. Thank you for joining our webinar. My name is Michelle Beckwar. I'm the Education Impact Architect for Dupaco, and I'm going to be moderating the webinar today. Joining me is Tammy Reckenbach, Vice President of Member Services and Training, and Tammy leads our training team who work really closely with our employees, making sure they have the knowledge and the skills to help our members with any of their financial needs. So Tammy is an excellent expert today for the topic that we've got going on. So just a couple housekeeping things before we get started. We are having a webcam for portions of this webinar. We're going to have the webcam on only at the beginning during this introduction, and then we'll turn it off, but we'll turn it back on at the end for the Q&A part of the session. Secondly, as a courtesy to all attendees, we have muted the phone lines just to make it easier for everyone to be able to hear it. But please know that you can still ask questions. So throughout the webinar or at the end on your toolbar, there is a questions box, and you can just type your questions in there, and then we'll go through all of those at the end. So why does Dupaco hold these type of webinars? As a member-owned credit union, our unique cooperative structure means that we put our members' best interest first. And our goal is really to provide education to our members to make sure that they can actually make the best financial decisions for themselves. So we provide this education whether it's at any of our branches, in person, one-on-one, or through our online resources like this webinar, which allows us to be able to reach and provide this information to our members no matter which community they live in. So what do we mean by financial checkup? The most important thing that I want to point out about this is that a financial checkup is more than just a budget. It really includes a big picture view of your entire financial picture and planning. So today we're going to cover a lot of information, so we're not going to actually dive too deeply into any one area. We just want to make sure that we have plenty of time to answer any questions that you might have at the end. But on screen you can see that we're going to be covering examining your current situation, planning for the unexpected, legal documents, preparing your accounts, and then organizing your records. And also please just keep in mind that the information we're presenting today is meant to be informational and used as a guide to help you in your planning. It shouldn't be taken as a legal advice. Everyone's situation is unique, and we recommend that you meet with your financial planner or attorney to address your own individual situation. Maintaining your financial well-being is really a lot like maintaining your physical health. It requires regular checkups to make sure things are going as planned. It also means that you may need to make adjustments over time to account for changes in your life or your changes to your goals. The information and steps we're going to cover in this webinar are going to help you put a plan in place. And even if you already have a plan in place, it's actually a good reminder of what areas you should be reviewing on a regular basis. So where do we begin? Tammy, can you just kind of explain what that first step is that someone should take when they're doing a financial checkup?
Sure, Michelle. Well, the best way to begin is with your goals. Whether you're setting goals for the first time or revisiting goals that you already have, this is a very important step in the process. And we recommend that you write your goals down. This will help you clarify what it is you want and help you stay motivated. Studies actually show that people are more likely to achieve their goals when they write them down. Your goals may contain a mix of short and long-term goals. Short-term goals are things that will take you less than a year, like creating a budget or paying off a credit card. Mid-term goals are things that would take about 1 to 3 years. Saving for an emergency savings account is one of those types of goals. Long-term goals are things that would take more than 3 years to reach, like paying off a vehicle or saving for a down payment on a house.
All right, so once the goals are set, the next step you want to do is create or review your budget. And a budget really is that best place to start because you need to know where you currently stand before you can even put any plans in place for the future. And Tammy, I think most people probably know what a budget is, but could you just go through some of the basics and explain how it can help them?
Sure. At a very basic level, a budget is going to let you see where you stand financially, comparing your income against your expenses to see what money you have left over each month. And it's really important that you put this in writing and that you actually physically look at this. A lot of us think we have a budget in our head and we think everything's going along great, and sometimes putting it on paper makes it really real. You want to try and account for as many expenses as you can, including not only the fixed expenses that happen every month, like mortgage or rent, but also variable expenses that can fluctuate, like entertainment, clothing, and vehicle maintenance. Listing out your expenses will help you make decisions on where you might be able to cut back on spending. It helps you identify which expenses are necessary, like utilities, and the ones that may not be so necessary, like cable or entertainment. A budget can also help you manage your debts. You can track how you are controlling or paying down on your debt. Maybe you have several credit cards that you want to pay off. A budget is not only going to help you put a plan in place, but it's going to help keep you on track. We fully understand it can be very challenging to follow a budget, but it also is important to track your spending. Keeping track of your spending can help identify spending leaks that you may not have even realized were impacting your budget. For example, grabbing a cup of coffee every day. This can actually add up over the course of a month. But when you have goals you want to achieve, this type of expense could be holding you back from saving money. Another one that catches people off guard is gifts, especially people with children, as they have those birthday parties to go to, and the cost of gifts can be an unexpected expense and add up really quickly.
So I guess, one thing I want to highlight, I think a great takeaway from looking at a budget and reviewing your budget is that, again, you don't just do this once and forget about it. You really need to track your spending and make adjustments as needed. And one of those reasons is because there are various life events that happen to us, whether it's a job change, getting married, buying a house, or even a new baby, or maybe you're on the other end and you're looking to retire. These things can affect your budget and your goals. So your budget really should change as your life changes. So back to taking a bigger picture look at the financial checkup, we have our goals and our budget created, but what other things maybe should someone do annually within their checkup every year?
Yeah, there are several things that you should do annually. Check your credit. Since your credit affects so many things, it's important to make sure you monitor it so that you can either build it or keep it healthy. A good credit score can help you pay less in interest on loans and credit cards, so it does pay to have a good credit score. Your credit score can also affect your insurance premiums that you pay. Next, you're going to want to review your insurance policies. Whether it's your homeowner's, auto, health, and life insurance, you want to make sure you have an adequate amount of coverage. The amount of coverage for each of these is going to depend on your personal situation, but you want to make sure you're accounting for any changes in your life, like a new baby. If you have any investment or retirement accounts, you'll want to review these and see if they are performing as you had hoped. Depending on your age and where you are in life, you may want to adjust your risk levels. And if your employer offers a 401k, make sure you are contributing to take advantage of the matching funds. This is free money.
So I think one area, too, that people maybe have a hard time when they're looking at their budget or planning is those what-ifs of life. What can people do to help maybe prepare for those unexpected events?
Well, one way to prepare for those what-ifs is to build an emergency savings account. Ideally, you want to have at least 3 to 6 months worth of income in this account. An emergency savings account is meant to help provide that support in case of a job loss, a medical emergency, or other unexpected events. This is why going through a budget exercise is so very important. You want to make sure that you can set aside money each month to help build an emergency savings account.
So kind of taking that what if a little further, we want to look at preparing for your final arrangements. We know that this is not always an easy topic for people to think about, the possibility of being unable to care for yourself or even your own death. But preparing for these possibilities really is an important part of your entire financial well-being. So the information, again, we're going to cover here because this is going to get a little bit more into some details, but please know that it's not meant to tell you what you should do, but rather just help you understand why it's important. It really should just be used as a guide. Every person's situation is unique, and we just want to make sure that you're meeting with your financial planner or lawyer to address any particular unique situations that you might have. So along with that, I know that there's a lot of ways, Tammy, that people can prepare for those final arrangements. There's a lot of different documents and even just ways of setting up your accounts. Can you just kind of take a look first at the basics of each area and talk about some things people should consider when they're doing this?
Absolutely. First, let's address what we mean by final arrangements. This type of planning can really be called estate planning. But people hear estate planning and think of this as something for people who are really wealthy. But this type of planning is for everyone, regardless of how large or how modest your assets are. And by assets, this just means what you own, which can be your car, your house, investments, but even your savings and checking accounts, and items like your furniture. So it's really important that everyone takes some time to plan. People often wonder, when is it an appropriate age to start planning or get a will? But there really isn't a set age for this. Even people in their 20s would have assets or reasons they would want to have a will put in place. People often think that they should wait until certain life events like getting married or having kids, and these are definitely valid reasons, but you don't need to wait until these events to put a will in place.
So when you're talking, putting some things in place, can you explain maybe a little bit about what those documents are, some of those legal documents, if you will?
Absolutely. And sometimes these documents can get really confusing, and we think that something's going to go a certain way, and then we find out that maybe it wasn't quite exactly how we had expected it to be. So it's really important to understand how these documents work before the time comes that you have to put them into practice. For example, power of attorney is a way for one person to act on an individual's behalf to manage their affairs. It's a legal document that gives someone you choose the power to act in your place in case you would be unwilling or unable to do so. Each state will have its own laws, but in many cases when you don't have a power of attorney, the courts will step in and appoint someone. This could be either a medical or financial power of attorney, allowing a trusted person to take care of important matters for you, like paying bills or directing your medical care. These would be two separate documents, and you can either have the same person be your power of attorney for both medical and financial, or you can choose to have different people for each. You may be more comfortable with one person handling your medical affairs than another person, or you may be more comfortable with one person handling financial than another person, and in that case you would want to have two different powers of attorney there. One thing that we see quite often and that a lot of our members don't realize is that a power of attorney ceases on death. That the authority of that power of attorney is only valid while the person is alive. So if you've granted somebody your power of attorney so that they can take care of your financial affairs and you pass away, that power of attorney is no longer valid, and that person no longer can act on your behalf. That is when the will take over. So a will, on the other hand, is something that does go into effect upon your death. So a power of attorney is enforced while you're alive, but the will goes into effect after you pass away. And the executor of your will be the only one who will now be able to manage your affairs. A will is a written document that indicates how your property will be distributed at the time of your death. This is something that you can change throughout your lifetime to account for any changes. And it also allows you to appoint a guardian for your minor children. It's important to note that without a will, the court will decide what happens with your assets and who's responsible for your kids. Young families often don't realize this, and they don't realize how important it is to put those procedures in place while their children are young. One thing many people don't realize is that wills can have limitations. In particular, beneficiary designations on financial accounts, insurance policies, and other assets may take precedence over wills. So it's important to make sure your beneficiary designations are up to date and reflect your wishes. If you don't list beneficiaries, then your will should cover those accounts. For example, say you list your spouse as a primary beneficiary on your retirement plan at work, but then you get divorced and marry someone else. If your first spouse is listed as the account beneficiary, he or she will receive those assets at your death, even if your will says otherwise. And that, again, is another common misconception that our members have. When you list a beneficiary on your account cards here at the credit union, that is the person who those funds will go to upon your death, and that supersedes the will. So it's a really good idea to stop in and visit with our member service representatives and just make sure that those beneficiary designations are exactly how you want them to be. Another way to manage these affairs is a living trust. A living trust is a legal document that provides lifetime and after-death asset management. Like a will, it spells out exactly what your desires are and with regard to your assets, your dependents, and your heirs. But unlike a will, a living trust is in effect while you are alive, and you or someone else are appointed as the trustee. You would retitle all of your property to be in the name of the trust rather than your personal name. And then upon death, the trust successor that you name would then become your trustee. There are pros and cons with a living trust. One example is that a living trust may avoid probate on your assets, saving your heirs time and money. But it may also be more expensive and time-consuming to get it set up in the beginning, depending on how complicated your estate is going to be. Probate is a legal process that takes place after someone dies and essentially deals with settling the deceased person's estate. Paying any debts and distributing the property is dictated by the will. And with a living trust, you are still going to need a will, which is called a pour-over will. This is meant to address any property you may have missed and it isn't covered in the trust. There are times when members will forget to come in and retitle certain accounts in the name of the trust. And in that case, the will would take care of those accounts that had been forgotten or left out of that process when they were retitling everything. Another type of trust that you can do to help prepare for your final arrangements is a funeral trust. This is a way of setting funds aside and pre-planning your funeral arrangements. There are different ways of setting this up, like directly with the funeral home or with an insurance company. But again, as with any final arrangements and legal documents, there are advantages and disadvantages. And we recommend that you thoroughly discuss your options with your estate planner or attorney to make sure that you make and understand the right decisions for you.
So taking a look now, Tammy mentioned a little bit about, with the beneficiaries on accounts, we want to talk about account titling or account ownership. Things like savings, checking accounts, or even investment accounts. Tammy, could you just go through and explain the different types of accounts, titling, and then how they kind of work with final preparation?
Yeah, sure. Many people think that if they have a will in place, all of their assets will be distributed according to the details of their will. But it's important for people to understand that it is possible for assets to bypass that will based on how they're set up as far as their accounts go and what beneficiaries they have listed. So let's look at some different types of account titling that you can have set up. An individual account is when the account is owned by one person and one person only. Upon the death of the owner, the funds will be paid to their estate or to the beneficiaries on the account. Now, there are some situations where an individual passes away, they're not going to have an estate, and there are no beneficiaries. And in that case, those funds are locked up, and we have to go through the process of signing what's called a small estate affidavit and wait for other members of the family to come forward and make claim to those funds before they can actually be dispersed. So it's really good to either make sure that you do have a beneficiary listed on your account or that you do have a will that's going to handle that, because the small estate affidavit process can be a little bit cumbersome for your surviving family members. Let's take a look at a joint account. A joint account is owned by 2 or more people during the lifetime of the owners. All have an equal basis to withdraw the funds while both parties are living. With a joint account, something called right of survivorship exists. And this is when the account is then owned equally by the surviving owners. So if you have a joint account with someone and one of you passes away, the other person who was on that account now fully owns 100% the funds that are remaining in that account. If that second person were to pass away, the funds that were remaining would go to that person's will or to that person's estate. So it's important on a joint account that people understand that with those funds, if you are both, say, in a car accident or something like that, those funds would go to the estate of whoever the last person to pass away is. And so sometimes those situations can get a little sticky as well. So if you have a joint account, you just want to make sure you're comfortable knowing how that would happen if one of the owners were to pass on. A payable on death account is when you name a person on the account to inherit the funds, and you're essentially naming a beneficiary. And remember, when you put a beneficiary on that account, it will supersede the will, and the account card will handle how that money is going to be dispersed. When it's an individual account ownership and payable on death does not have access to the funds while you're alive, your beneficiary can only access those funds upon your death. But if you have a joint account and the payable on death person is one of the joint owners, then as a joint owner, they already have access to the funds while you are alive. So in that case, a lot of times on a joint account, it's not really necessary to have a payable on death if the payable on death is the same as the joint owner. So because it will take care of itself that way. But again, a lot of these situations are very personal, and the best way to determine whether your accounts are structured properly is to come in and talk to one of our member service representatives and let them kind of review your account structure and make sure everything is the way you want it to be.
So, you mentioned this before, Tammy, about the beneficiaries. I mean, there's a lot of areas that I think people don't understand. I know this is one I personally didn't understand, so I just want to kind of let's touch base again, really, because I think a lot of people don't realize that the beneficiary information can supersede the will. You think you have a will in place, and that's all you need to do. Can you just kind of talk a little bit about that?
Yep. When you name a beneficiary or a payable on death account, it does supersede the will. At that point in time, the will is really for things that don't have a beneficiary designation. Now, sometimes it's important to put the beneficiary on there because you know that that pocket of money is going to go to that grandchild or to that niece or nephew or brother or sister, and you know that that CD or whatever it is going to go directly to that person. Sometimes people want things split up a certain way, and they'll say, you know what, I want half the money to go to my grandchildren, I want 25% to go to my nieces and nephews, and 10% to go to the church, and they have a specific way that they want those assets split up. That can only really be done through a will and by having an estate. So it's really, really important that everything is looked at specifically and that you know how you want that to get done. And sometimes what will happen is people think that that will is going to take care of everything and split it up exactly how they want, and then they go and list a beneficiary on one of their accounts. Again, we need to make sure they understand that when that happens, that pool of money is now pulled out of that disbursement that the will is going to make and will go according to that account card. So again, it's a very personal situation, and we're always here to kind of review your accounts and make sure they're the way you want them to be.
And just a personal example to kind of maybe help illustrate why a financial checkup on a regular basis is so important. I mean, when I was single, I had listed my parents as beneficiaries. I didn't have a will. But when I got married, my husband and I put a will together, and I had to now remember everything that I had listed. I mean, if I hadn't remembered which accounts I had my parents as beneficiaries. That's correct, right? That they would have received it instead of my husband, even though my will said it.
Correct. Yep, and that happens a lot, and folks will come in and set up a life insurance policy or some sort of an investment fund, and they'll list their children as beneficiaries, and then they have another child, maybe 5 or 6 years later. If they don't remember to come in and update those beneficiaries, that child could be left out of the inheritance process. So reviewing that annually is really important.
Great. So, let's talk about how can we make this review easier for you. It's all about organization. So the last part of our financial checkup planning today is about organization. And, we want to talk about why it's important to maybe provide some tips on how you can keep track of all this information.
Yep. The biggest reason why it's important to keep a record of all information that it not only helps you stay organized, but it's going to provide peace of mind for your loved ones in the event of your death or if you are incapacitated. If you're like most people, we just keep the information in our head, but when you're gone or unable to do this on your own, how will your family even know where to find this information or what exactly it is that you have or what and how many accounts or policies are laying around? You create one master document that contains all of this information, it will save your loved ones stress and time. And if you want to let either your family or at least the executor of your will or trust know where to find this master file, that would be very helpful to them as well. It won't help to create the file if no one knows where it is. And there's a lot of things we don't think about, like usernames and passwords on websites. And I know we talk about this a lot. I had a friend and they had lost a spouse, and Netflix, I think it took about 6 months to turn Netflix off just because no one knew how to log in, and Netflix required a lot of documentation like death certificates and things like that just to get it shut off. So it can put you through a lot of trouble. Your loved ones can end up going through a lot of trouble trying to clean some of that up if they don't have the information that they need to do that, like usernames and passwords. So some little things like that just become very, very important in a time when they're already really stressed out. So if you can leave them a roadmap, that would be really great. We also deal with a lot of surviving children who come in and they just really don't know where mom and dad had everything. They don't know if it's buried in the backyard or if it's in 7 different financial institutions. And sometimes things don't surface till 2-3 years later or till it goes remitted to the state because it's unclaimed property and now it's part of the Great Iowa Treasure Hunt. So in order for you to make sure that your heirs do get everything that you want to make sure that they're getting, it's really important to have this list and be organized and have everything in a place where they can find it.
So we do have a document on our website. It's in our life events section. If you go to our website, dupaco.com, on the top right corner you'll see a blue tab that says life events. You can go in there and we have a master list document, and like Tammy said, it allows you to put all that information in one spot. And we realize it may not necessarily work for you as we have that document set up, but at least it can help you start to identify the type of information that you're going to want to keep record of. And before we wrap up the presentation, we want to just talk about meeting with someone. Tammy mentioned, obviously, if you want to come into any branch, any member service representative can help you. If you're looking for something more specific to retirement planning or estate planning, we do have services. We have Dupaco Financial Services as well as First Community Trust. You can find more information about these services on our website. You can see there on screen. If you go to our website and click on investments, you'll see Dupaco Financial Services, and then you will see wealth management for First Community Trust, and you can figure out whether or not they're a good fit for you or not. So I'm going to turn the webcam back on, and we've come to the end of the presentation where we can now go through, oops, excuse me, sorry, got a little ahead of ourselves here. So we can go through now the questions. But just as a summary for you, here is some of the information we talked about, just a quick little recap. And I'm going to pull the questions now, see what we got. Looks like we just have one question, actually. So Tammy, you did a fantastic job, I guess, of explaining everything. The question is wondering if we would be sharing our PowerPoint, and yes, we are. We are actually recording this webinar, which will include everything you've seen on screen, and then we're going to post that to our website. So it'll probably take about a week normally to get that posted out there, and you can access it at any time that you want at your convenience. So here's another question. Yeah, let's. So Tammy, do we have a budget form or software that we can recommend to help someone with their budgeting?
Yeah, there's I use Quicken, and I like how that works. I like how that kind of lays out and helps me keep track of things. We also have a Excel spreadsheet basically that we had built here that will help folks kind of put in their income, their expenses, and kind of help them see if their spending categories are where they want them to be. It tells you what % should be for housing, what % should be for food, that type of thing. And it'll kind of help you see where you are. And that should be available on our website as one of our tools there for budgeting. And if you don't see that on the website, just give us a call and we can email that to you as well.
And just since we're on the topic of the budget, do you want to talk maybe a little bit about the money makeover and what that process is? Because you review budgets with people in that, correct?
Absolutely, yep.
Okay.
Yep, when folks come in for the money makeover, we are going to start with a budget, and a lot of times we'll email that budget worksheet out to you ahead of time so that you can start to spell it out, because we kind of need to know where you are as far as income and expenses go before we start that money makeover. Then we're going to pull your credit report, and we're going to take a look at what your credit score is, and we're going to help you figure out how do you make that credit score go higher. You know, what are things that we can do within that credit report to drive that score higher? Because like we had talked about earlier on, it affects your rates that you're going to pay. It also affects what you pay for your insurance for your car, your home, things like that. So we're going to kind of work through that process. A lot of times it takes us a little while to get through budgeting and understanding credit, and that might take us 6 months to a year to really get you feeling like that's going really good, and you know, we'll work with you through that time. Once we get that all kind of cleaned up, then we can start to talk about retirement planning and estate planning and kind of what that's going to look like, and getting some of those emergency savings accounts set up. Sometimes we can do that right away at the first budgeting session. Is we can set up some savings accounts for emergency funds, but it really depends on your situation and your resources, how quickly we can move through that money makeover process.
Great, thank you.
So
another question we have is, someone's wondering, what if my beneficiary passes away? So as an example, their spouse is the beneficiary and they both perish in a car accident. The will takes over at that point then, is that correct?
We've actually had situations where there have been accidents where two individuals had passed away. And what happens is the coroner issues a report that has a time of death on it. And the assets that are available at the time are dispersed according to the last person to die, according to their will. So, you know, all of that would have to be provided for at that time. It doesn't happen very often, but when that does happen, it goes according to the last person to die. So if you're a married couple, a lot of times your wills leave everything to each other, and then after that, everything is the same. So you'll say, I leave everything to my husband, I leave everything to my wife, and then after that, my kids split it equally. If that's the case, and you were in an accident like that, you'd probably be fine because it would go according to, you know, how you wanted your kids to get that money. In situations where you have a joint account and maybe you're not a married couple or you're not a family and you have different wishes for how you want that estate to go, then that is where it could get a little dicey if there aren't specific beneficiaries listed on the account. Okay. So it really, it's just situational, and again, those are things we can talk through one-on-one, or you might want to visit with your attorney about.
Okay, great. So back on the budget, they're wondering if there's a budget, if we're aware of a budget, or if there's one available that is set up by pay period versus monthly. They usually see monthly or weekly, but nothing that's biweekly, which is a good point because I'm paid biweekly myself. That'd be a great way to keep track of it.
Yep, I actually did my own biweekly budget that I made my own kind of Excel spreadsheet for. The one that we have here is set up for monthly, but I'm sure that we could help talk you through that biweekly situation and help you get into a way where that feels comfortable. And just the way that I did mine was I said, here's this paycheck, and what's going to come out of each paycheck, so that when you get that paycheck, you take care of those expenses first, and whatever's left over is what you have until you get your next paycheck for things like eating out or going to parties or whatever you have that you need that extra income for there. But it can be done according to a biweekly paycheck, and that's definitely something that we can look at if we need to.
Great. So this next question, I think I understand it, so maybe we can answer it in a couple different ways. But it sounds like she has herself and her daughter on her checking account, and I'm going to say that's joint account. She wants it, though, divided equally between her 3 children upon her death. So what should she do? I mean, that's a situation where it sounds like she's joint owner with 1 child, but she actually wants it upon her death split among all her children.
I'm going to go on the assumption that there is 1 child on that account because that is the child who helps you pay bills or is there just kind of if you need that person for an emergency. If you want that money to go according to your will and you would predecease the child, then what you need to do is list her as a power of attorney, because then the way that would work is she can still transact and do all of that for you while she's living, but in the event that you were to become deceased, then the will would take over because that power of attorney ceases on death. So if that's how you want that account to operate, we would need to restructure the titling on that account and how that's set up. And again, that's something we could talk to you about, and you might want to also review with your attorney.
Okay.
Yeah.
Looks like we just have one more question right now, and it's hard to see when this one came in. They want to ask, can we talk a little bit more about the money makeover and what you can expect to get out of it? So I know you talked a little bit, but maybe if you could just kind of focus on what they would get out of that, or that'd be great.
Every money makeover is so different, and it really depends on your situation and where you are. You know, for some folks, they already budget and they've already got that, you know, nailed down. What they really need is to maximize investment opportunities. You know, so sometimes we can skip right to that part. Other folks just really need to start with the budget, and then we work from there. So they're very, very individual, but it all does start with a budget, and it starts with a plan, and it starts with knowing your goals and what you're driving for, so that we can kind of help you get there. And then once we kind of get that budget roadmap fixed, and then we look at your credit, because in order to get to some of those goals, you need to have a credit that's going to allow you to borrow money. So if you're hoping to buy a home, but you're not going to qualify for a home loan, we need to figure out what do we got to do to get you to that point. So we're going to start with that. We're going to start with that. We can't put the house up until we have a good solid foundation. So that budget and that credit report is the foundation. Then once we have that built and that's running really well, then we're going to build you up and help you reach those goals that come after that. But we got to get that foundation laid first.
Great.
Yep.
So we do have another question that came in, and this one I'm not sure, maybe you can answer it, but maybe this is something they might need to speak with their attorney about. But they're wondering if there's a way to list in a will that'll split the money between their children, but they loaned one child money. And they want to make sure that that loaned amount is removed from that child's, I guess, their portion of the funds from the will. So is there a way to do that?
That would have to be through a trust or through a will, and you would want to talk to your attorney about that. That is something that your executor or your successor trustee, if it's through a trust, would have to manage, and that has to be absolutely spelled out so that it's done how you want it to be done. So that can only be done through a trust document or through a will.
So it is possible, but they would just want to make sure that they meet with their attorney.
Yep.
Okay,
yep.
Great, thank you.
Yep.
I think we have answered all the questions. As I mentioned earlier, I will be sharing this, so I'll email out everyone a link once we've got this posted on our website. I would also like to ask, when you guys close out of the webinar, a survey will pop up. Oh, we do have one more question. So a survey will pop up. If you wouldn't mind, just take a minute or two to fill that survey out. Your feedback really helps us better provide this type of education and understand the best way to get this to you. So one other question. This person does not live in Dubuque. Do the money makeovers need to be in person? That's a great question.
Yes, that is a great question, and we are actually experimenting with some new technology. Yep. We're using Skype. And we do have a few of our money makeover artists that are equipped with the Skype technology and would be willing to set up a time to utilize that to do the money makeover that way. So a great question, and we're going to do whatever we can to see if we can help you out there.
Great. So I will follow up with this person just to make sure that we, touch base on that again. But that's what's great about it, and that's kind of why we're doing these webinars, because we realize that not everybody necessarily lives next to a branch, or it's not as easy, to travel to them. So we want to make sure that we're doing as much as we can remotely. Let me just do a final check here. Here we go. For a married couple, this is great though. Yep. For a married couple with numerous Dupaco accounts, 12 including a business account, should we create a will first or come in first and see if their accounts are structured properly?
I think it's important first to see how your accounts are structured so that you know, and then to meet with your attorney. If you have a business and you have a lot of accounts like that, you're going to need to have probably a pretty good estate plan in place, and like a will or a trust that's going to handle that. But your attorney's going to want to know how things are titled when you go to meet with your attorney. So I would get that inventory first, and so that you can take that to your attorney, and then definitely meet with them to make sure that it's going to go the way that you want it to, and there aren't any surprises down the road.
Great question. I do think that we are at the end. So thank you, everyone. Tammy and I really appreciate you joining us today. If you do have any questions, you all have my email address from when the invites went out, and I will be following up with a link of the recording, but by no means, please don't hesitate to email me, or as Tammy said, if you're looking to speak with someone, go into any branch or give a call, and we will figure out a way to talk with you about whatever your financial needs are.
Yep, thank you.
Thank you very much. Have a good day.